Something just happened that most people will never hear about. Not on the news, not from your broker, not from anyone who benefits from keeping you in the dark. And if you are watching this right now, you are one of the few people who might actually be positioned to understand what is coming. Welcome to SHF Money. If this is your first time here, hit that subscribe button right now and drop a like on this video. Because what we cover here is not what they want you to know. We post every single day because the information moves fast and you cannot afford to miss it. Now let me ask you something. Last year, if someone told you silver was going to cross $120 an ounce in just a matter of months, what would you have said? You probably would have laughed. You would have called that person a dreamer, maybe even a lunatic. But that is exactly what happened. Silver crossed $121 an ounce. That number that sounded insane a year ago became reality. So now when someone says silver is heading to $500 an ounce, the real question is not whether it is crazy. The real question is whether you are paying attention. Because the people who laughed at $121 are the same people who are going to be shocked at $500. And the people who are watching this video right now are going to be the ones who saw it coming. A Dutch investor and entrepreneur named William Middelkoop has put out a call for silver to reach $500 an ounce. Now, before you dismiss that, understand who this man is. He founded a commodity discovery fund back in 2008. He sits on the advisory board of one of the most respected monetary and financial institutions forums in the world. This is not some guy posting on the internet. This is someone who has spent decades watching how real money moves through the global system. And his reasoning is not about hope. It is about structure. It is about math. It is about a system that has been building pressure for 45 years finally releasing. Let me walk you through exactly why this makes sense and why the timeline might be closer than anyone wants you to believe. Start with the chart. For 45 years, silver has been coiled inside what analysts call a cup and handle formation. Forget the jargon for a second. Here is what that means in plain language. Silver spiked hard in 1980. The Hunt brothers situation drove it to $50. Then it crashed. Then it built back up slowly toward that $50 ceiling again over the following decades. And every time it got close to that ceiling, it got hammered back down. That happened for 45 years. 45 years of pressure building. 45 years of every attempt to break out getting suppressed. That is not normal market behavior. That is a coil. And when a coil finally releases after that long, the move it makes is not a blip. It is a detonation. Silver already broke through that ceiling. It already crossed $100. That ceiling that held for 45 years is gone. You cannot put this back in the box. You cannot reset the clock. The old price regime is dead. What the chart tells us now is that triple-digit silver was not the destination. It was the first checkpoint. The technical projection, based on the depth of that 45-year base, points toward numbers that most people still cannot bring themselves to say out loud. $500 is not a fantasy projection. $500 is where the math points when you have a base this wide and a move this structural. Now here is what makes this different from 1980 and different from 2011. In 1980, it was the Hunt brothers trying to corner the market. That was artificial. When the government stepped in and changed the rules, the trade collapsed. In 2008 to 2011, it was the global credit crisis driving fear buying. When the crisis eased, the pressure came off and silver fell back. Both of those were events. This is not an event. This is a structural shift. This is the underlying foundation of the silver market changing in a way that cannot be undone by a policy change or a market intervention. The demand side of the silver equation has been completely transformed. Think about what silver actually is today. 70% of all silver demand now comes from industrial use, not from people stacking coins, not from jewelry, not from monetary demand. 70% comes from factories, from technology, from the physical infrastructure of the modern world. Solar panels use silver. Every single panel on every single rooftop requires silver. The United Kingdom has now mandated that homes must install solar. That is not optional. That is law. And once that silver goes into a solar panel, it does not come back. It is gone. AI data centers use silver. The explosion in computing power required to run artificial intelligence requires massive amounts of silver in the circuits, in the connections, in the components. Every server rack, every data center being built right now is consuming silver that will never be recovered. Military applications use silver. 500 ounces of silver in a single Tomahawk missile. One missile, 500 ounces. That is a full monster box of silver eagles. Gone in an instant. 11,000 ounces in some torpedoes. And think about how many of these weapons are being used and produced right now across the world. That silver is not coming back. Electric vehicles use silver. 5G networks use silver. Medical equipment uses silver. Aerospace uses silver. Silver is not a nice addition to modern technology. It is embedded in the architecture of the electrified digital world. And here is the critical fact that changes everything. Silver is the best electrical conductor on the planet. Not one of the best. The best. There's no substitute that performs at the same level. There is nothing that can replace it in these applications at scale. If there were, it already would have been replaced. The industries that need it know this. They have no choice but to keep consuming it. And consumption is accelerating, not slowing. Now let us look at the supply side of this equation, because this is where it gets serious. For the last several years, the silver market has been running in a production deficit. That means more silver is being consumed every year than is being pulled out of the ground and recovered through recycling. Not by a little, by a lot. Over 1 billion ounces in deficit over the past 5 years, over 1 billion ounces in the red, and for decades, the market was able to hide this problem. How? By quietly drawing down the stockpiles that were built up in the 20th century. Government reserves, old monetary silver, remelted coins, legacy bars sitting in vaults. That cushion absorbed the deficit and kept prices from reflecting the real supply pressure. But that cushion is gone now. The stockpiles have been drained. The market is now eating directly into the finite, transparent inventories that are left. The physical squeeze that people have been warning about for years is no longer theory. It is happening right now, and you cannot fix this overnight. You cannot fix this in a year. Here is why. Most silver does not come from silver mines. The majority of silver produced globally is a byproduct of mining for other metals: copper, zinc, lead, gold. When miners go looking for those metals and find silver alongside them, silver supply increases. But when those metals are not being aggressively mined, silver supply does not respond to silver's own price. That means even with silver prices exploding higher, the incentive structure for increasing silver production is broken. And on top of that, building a new mine from the point of discovery to actual production takes over a decade. Even if a massive new silver deposit were discovered tomorrow, you would not see meaningful new supply for 10 years or more. And the permitting process is a nightmare. The regulatory environment makes it nearly impossible to bring new mines into production. Protests, environmental challenges, water contamination concerns. Mining engineers who work in this space will tell you straight up that it is nearly impossible to get a new mine approved and operational under current conditions. So you have demand accelerating, you have supply structurally constrained with no quick fix available, you have the old stockpile cushion gone. And you have the physical market now under real stress. This is not a silver enthusiast telling you silver might go up. This is the fundamental supply and demand structure of a critical industrial commodity screaming that the current price is wrong. Now let us talk about the gold to silver ratio, because this is one of the most important and most overlooked pieces of this entire story. Silver comes out of the earth at roughly a 7-to-1 ratio relative to gold. For every 7 ounces of silver mined, roughly 1 ounce of gold comes out. That is nature's ratio. That is geology. So the natural relationship between gold and silver pricing should reflect something close to that ratio. But for decades, the market ratio has been sitting at 60-to-1, 70-to-1, sometimes 80-to-1. That means silver has been priced at a fraction of what the natural supply relationship would suggest is fair. Historically, for thousands of years, the ratio was 16-to-1, sometimes even tighter. And when the ratio snaps back toward its historical mean, what happens to silver is violent. If gold reaches $5,000 and the ratio normalizes even just to 30-to-1, silver is over $160. If the ratio moves to 16-to-1, which is where it sat for most of human monetary history, silver at $5,000 gold means silver is over $300. You start to see how $500 becomes not just possible, but mathematically derivable. And here's the thing about the dollar itself. The currency that silver is priced in is losing value every single year. It has lost over 98% of its purchasing power over the last century. The system that props up that currency is visibly under stress. Even senior figures within the central banking establishment have acknowledged publicly that new monetary arrangements may emerge. When the unit of measurement itself is deteriorating, the real assets priced in that unit will eventually reprice to reflect reality. Silver is a real asset. It has industrial utility. It has monetary history. It has finite supply. And for decades, it has been priced in a currency that is being systematically devalued. The repricing that is happening now is not irrational. It is the market finally telling the truth. Now think about the psychological journey that silver investors have already taken. 3 years ago, silver was trading around $20 an ounce. If you told someone then that silver would cross $100, they would have said, that is a 5 times move. That is insane. That will never happen. But it did happen. And now here we are. It no longer sounds crazy to us because we watched it happen. The move from 100 to 500 is the exact same multiplier, 5 times. The same move that already happened once is now the next leg. And it will unfold against a tighter physical base, with more intense industrial competition for each ounce and against a monetary backdrop that is deteriorating faster, not slower. When $500 silver happens, The people who are holding silver will look back at $120 silver the same way people look back at $20 silver today. They will wonder how anyone could have sold it. They will wonder how anyone could have missed it. And the people who missed it at 20, missed it at 80, missed it at 120 will be the people who look back at 500 and realize they had every chance to act and chose not to. Now, I want to be straight with you. Nobody can tell you the exact date this happens. Nobody can give you a precise timeline and be completely honest at the same time. This is not next week. This is not guaranteed to be next year. Markets do not move in straight lines. There will be pullbacks. There will be moments of doubt. There will be periods where it feels like nothing is happening. But the structural case does not change between those pullbacks. The deficit keeps growing. The demand keeps accelerating. The supply constraints do not resolve. The dollar keeps losing value. The ratio keeps pressure building toward a historic normalization. None of that reverses because silver had a bad week. The direction of this market has been set by forces that are bigger than any single trader, any single fund, any short position on any exchange. The era of paper games suppressing the physical price of this metal is ending. The physical market is asserting itself. And once the physical market takes control, the people holding actual silver are the ones who are sitting in the right position. You are watching a quiet transfer of wealth happen in real time. This is not the kind of wealth transfer that gets announced. It does not show up on the evening recap. It does not get explained by the people who benefit from you staying confused and staying in assets that lose value every year. It happens slowly at first, then all at once. And the people who recognize the structural shift early, the ones who position themselves before the broader public figures it out, are the ones who end up on the right side of history. The ones who wait for permission from the mainstream are always the ones who arrive too late. You are watching this video right now, which means you are not waiting for permission. You are paying attention. You are looking at the same numbers that institutional players look at. You are seeing the same supply deficit data that the big players see. You are tracking the same ratio compression that has historically preceded explosive repricing events. The only question left is a personal one. What do you do with this information? That is not a question I can answer for you. That is not a question anyone should answer for you. But there are really only two moments people remember when they look back at a major market repricing. The moment they acted, or the moment they wished they had. Both of those moments are defined by a choice made right now. In the window before the move becomes obvious to everyone, $121 silver already happened. That chapter is written. The next chapter is being written right now. And the people watching this video are the ones who at least have the information to decide which side of that chapter they are on. This is SHF Money. If you found this valuable, hit the like button and make sure you are subscribed so you do not miss what comes next. We post every single day because in a market moving this fast, being even one day behind can cost you everything. Stay locked in, stay positioned, and stay ahead of what they are not telling you.